Welcome to Bittensor Weekly, your source of truth for everything happening in the Bittensor ecosystem. I'm your host, and this is episode 4, March 29th, 2026. This week, TAO pushes past 370 before pulling back to 320. Subnet tokens hit $1.5 billion in combined market cap, and a Bittensor staking product lands on Nasdaq Stockholm. Plus, we take a hard look at Chutes on Subnet 64. The number one subnet in the ecosystem and the center of a growing revenue debate. Let's get into it. Let's start with the numbers. TAO touched $371 earlier this week before pulling back to around $320 as of Friday, March 27th. Even after the pullback, that is still up roughly 15% on the week and about 75% for the month of March. Market cap sits around $3.4 billion. 24-hour trading volume has been running hot all week, peaking at $927 million on March 26th. On the network side, circulating supply is 8.86 million TAO. Total staked is 7.35 million, split between 5.29 million on root and 2.06 million in subnet alpha positions. That puts the staking rate at about 68%. Daily emissions continue at 3,600 TAO following the December halving. There are 57 actively producing subnets out of 128 total slots. The sum of all subnet prices is 1.42 TAO.
The big story this week is the ecosystem-wide repricing. Subnet tokens have collectively reached $1.5 billion in combined market cap according to CoinGecko, with 24-hour trading volumes topping 118 million. Nearly every subnet token has posted double or triple-digit gains for the month. Templar on Subnet 3 is up 444% on the 30-day. Quasar on Subnet 24 up 440. Nova on Subnet 68 up 218. Grail on Subnet 81 up 211. The catalyst was the Covenant 72B narrative, a 72 billion parameter language model trained entirely on decentralized hardware by Templar using 70 independent nodes. It outperformed centralized baselines like Llama 2 70B on benchmarks. Anthropic co-founder Jack Clark publicly endorsed the project, adding institutional credibility to the whole ecosystem. Second story, Safello, the Nordic crypto exchange, officially cross-listed the Bittensor stake TAO ETP on Nasdaq Stockholm on March 19th. The product trades under the ticker STAO and is now available in Swedish kroner. It was previously exclusive to the SIX Swiss exchange. This matters because it gives Nordic retail and institutional investors regulated access to TAO through a traditional brokerage account, no wallet needed. The ETP is physically backed by TAO tokens in cold storage, and staking rewards are reinvested to boost the net asset value. Third, a bearish counterpoint from Pine Analytics that ties directly into our spotlight. They published a detailed report arguing that most Bittensor subnets rely on emission subsidies far more than actual user revenue. We are going to dig into the numbers in the Chutes spotlight, but the headline figure is this. Across the entire Bittensor network, total verifiable annual revenue is estimated at only $3 to $15 million, against a combined subnet market cap of $1.5 billion. That is a revenue multiple north of 100x. Pine Analytics calls this the income desert thesis.
This week's spotlight is on Chutes SN64, the number one ranked subnet in the entire Bittensor ecosystem. And the reason we are covering it now is the Pine Analytics report because Chutes is the case study at the center of the revenue debate. First, what Chutes does. It is a serverless GPU compute platform for AI. Think of it as a decentralized alternative to services like AWS Lambda or Replicate, but for AI inference workloads. Developers can deploy models without managing infrastructure. Miners provide the GPU hardware, and users pay to run AI tasks on it. It is the most commercially active subnet in the network. The numbers from TAO Stats tell the story of its dominance. Chutes has a market cap of about $129 million. It has 13,290 unique holders, more than any other subnet by a wide margin. Its network is fully saturated at 256 out of 256 active slots. It has processed over 9.1 trillion tokens and serves more than 400,000 users. Daily emissions come in at about 632 TAO, giving it roughly 14% of all Bittensor emissions. Now, the Pine Analytics critique. Chutes receives an estimated 518 TAO daily in emissions, worth roughly $52 million annualized at current prices. But external revenue, what actual users pay for compute, is estimated at only $1.3 to $2.4 million per year. That means for every dollar a user pays Chutes, the Bittensor network subsidizes between $22 and $40 through TAO inflation. The subsidy ratio is stark. The bull case is threefold. First, Chutes is the only subnet with over $1 million in token buybacks, demonstrating real economic activity. Second, the 400,000 user base gives it a distribution moat that no other subnet has. And third, the ecosystem has roughly 18 months before the next halving, time to scale usage and close the revenue gap. The bear case is equally straightforward. If emissions halve and user revenue does not double, Chutes would need to raise prices significantly. That could push users to cheaper centralized alternatives. The question is whether Chutes can grow its user base fast enough to make the unit economics work on their own. This is the fundamental question for the entire Bittensor ecosystem, not just Chutes. Can decentralized AI infrastructure become self-sustaining, or will it remain dependent on emission subsidies? Chutes, as the #1 subnet, is the bellwether.
Let's look at what is moving this week. Top gainers by 7-day price change. NexisGen on Subnet 70, up 576%, though that is a brand new subnet registered on March 20th, so take that with a grain of salt. Constantinople on Subnet 97, up 189%, Templar on Subnet 3, up 36%, Targon on Subnet 4, up 35%, Quasar on Subnet 24, up 31%. On the losing side, Vocence on Subnet 102, down 34%, Allways on Subnet 7, down 32%, Efficient Frontier on Subnet 53, down 27%, Bitsec on Subnet 60, down 20%, Cartha on Subnet 35, down 20%. Top 10 subnets by emissions share. Templar on Subnet 3 at 8.81%, Targon on Subnet 4 at 6.43%, Affine on Subnet 120 at 5.01%, IOTA on Subnet 9 at 3.15%, Grail on Subnet 81 at 2.44%, Nova on Subnet 68 at 2.25%, Basilica on Subnet 39 at 2.07%, Score on Subnet 44 at 1.95%, Gradients on Subnet 56 at 1.64, Quasar on Subnet 24 at 1.59. The theme this week is simple: rising tide. When the base layer rallies 90% in a month, capital rotates into subnets. The alpha stake ratio has been climbing as more investors shift from root staking to individual subnet positions. This is the dTAO flywheel at work. TAO goes up, alpha tokens go up, more capital enters, better miners join, better products get built. But the Pine Analytics question hangs over all of it. The subnets building genuine revenue, Chutes with its buybacks, Targon on Subnet 4 projecting $10.4 million in annual revenue, are the ones positioned to survive the next halving. Everything else is a bet on growth closing the gap in time. That is it for this week. TAO at 320 after touching 371, subnet tokens at 1.5 billion, and the revenue question is the one to watch. If you found this useful, subscribe and hit the bell. Sign up for the companion newsletter at bittensorweekly.substack.com for deeper data tables and source links. I'll see you next Saturday.